For stock of the day, I thought we'd take a look at Fisher Paykel, the big health manufacturing business. Warning this morning revenue could fall as much as 14% this year, laying the blame squarely at elevated freight costs and falling hospital admission rates. Shares taking a bit of a hit today, down more than 6%. What do our experts think of the update? Because Fisher Paykel, one of these great sort of healthcare listed companies that we seem to have here in Australia. Andrew, what do you think of the update? And is this something to look at when it's being pounded?
Look, the update was not flash, but equally so, you didn't have to be Captain Obvious to figure out that freight costs are going to be an issue. I mean, ResMed also flagged that as well. So from that point of view, no, the market shouldn't be surprised, and I guess that's probably why the share price, albeit it's off a little bit, it's probably a bit muted. Could have been a lot more, but having said that, look, I like it as a business. I mean, certainly it's got really good return on equity. Its margins sort of well over 50%, but it's very hard to get a read on actually how the business is trading because, of course, being a healthcare company is severely impacted by COVID as well. So from my point of view, consensus valuations will see it probably pull back somewhere between 7 and 8% on a consensus basis. So consensus before today was about $34, so you'd probably expect it to go back into the 30s. It's trading, I think, at the moment around $24. So look, from my point of view, it's probably a watch because inevitably there'll be, as I said, a round of downgrades and you'll see some short-term weakness. But having said all that, if you sort of had your sort of 3 months hats on, just put a little list, just keep a bit of an eye on it because it is a quality business. But in the short term, it's going to be under a bit of pressure, I think. So it's a hold, Koshi.
Okay. Because, Henry, there's been a bit of a theme from a lot of our panellists recently when there's quality stocks, quality businesses that get hit over the last couple of weeks. What's been put into that category? Probably Ansell was put into that category by a couple of panellists. Wesfarmers, another one. Just great companies, sort of pounded. Do you start to nibble away and at those sort of stocks? Is this one of them, do you think?
No, not for me, I have to say. I think this one's going to go lower. We're going to see some downgrades coming in the cycle with this one. The problem, I guess, with these guys is that they've got a really big competitor out there in ResMed, and it's not just about freight costs. There are obviously some other issues there as well. And we're seeing the twin evils that we've seen, the supply chain and chip shortages. I mean, a lot of their machines have embedded technology in them with their sleep apnea treatments, and they sell a lot of masks as well. Commodity prices are going up. Everything that goes into their machines is increasing in price, so their margins are coming down. They're talking about a 250 basis point fall in those margins, that gross margin falling from 65%. So that is, I guess, an issue for them. And it's not just about freight, it's about the Omicron, it's about the US. And if you go shopping for a sleep apnea machine, you will find they all cost the same. Now, I don't know if it's just me, but you look at the websites and they all cost roughly the same. It's very hard to differentiate one from another. Both of these companies, ResMed and Fisher Paykel, have had a free kick in the last year or so because the Philips machines have had issues with the foam degrading, and as a result, that being blown into your lungs. Because at the end of the day, these just blow, they just blow air up your nose, basically. There's nothing particularly high tech about it, although they pretend there is and they dress it up as there is. But at the end of the day, it is just blowing nose up your nose, blowing air up your nose. So I can't get excited about this one. I used to own ResMed and I sold it out at around $39. I thought it had gone too hard and too fast. And as I say, if you shop around for the sleep apnea machines, they're all pretty much the same price. $1,500 buys you Fisher Paykel one, a Philips one, a ResMed one, whatever. They make a lot of their money on selling the periphery sort of instruments and the masks and the silicon, the air gap between the mask and your face. So there's a lot of money to be made there. But they're having issues in the US because of diagnosis, hospital admissions, Omicron, etc. I think this one has got lower to go. It has been on a slippery slide even before this was happened today, before this guidance. So I think this one's going to go lower. If it got to $20, then I'd start to get interested, and I think it won't be long before it probably gets there. So for me, it's got more downside. It's a sell. Not interested in this space just at the moment.
And so by the sound of it, you have the same view on ResMed as well.
Well, as I say, I mean, I thought I was quite keen on ResMed at one stage because of the Philips free kick, and I had them in one of our portfolios. They went to $39. I was really happy to switch out of ResMed, and I bought BHP at $37, having sold ResMed at $39. So that was a relatively good switch, I have to say.
Yes.
That has gone.
We'll cut you off
gone
now,
quite well.
Now that you're bragging. All right,
Sorry.
Andrew.
I'm going to cut him off.
Yeah. No, I heard you.
Cut me off.
I heard
Cut
you.
me off.
All right.